Hello and welcome to the Business Standard Morning Show. I'm Nazia Iqbal and here's a look at the stories for the day.
What the world needs now is people who see energy a little bit differently. Because seeing a more sustainable world isn't far in the future. We're building it now. GE, building a world that works.
The race to acquire Ambuja Cements and ACC seems to be entering the final lap now. The two top contenders, Gautam Adani and Sajjan Jindal, are now vying to take over the two leading domestic cement companies owned by international building materials giant Holcim, which is now exiting India after 17 years. There are some other contenders too, like India's top cement maker Ultratech. But why do all these leading firms want to buy Holcim's stake? And why did the Switzerland-based company decide to quit India, which contributes 27% of its global sales volumes? Watch this report to know more.
It has all the elements to hook you in. An intense bidding battle for Ambuja Cements and ACC, the two Indian subsidiaries of Switzerland's Holcim group, is going on. And it all began with baffling media reports that Holcim, the world's biggest cement maker, may exit India, a country which makes up 23% of its global cement capacity. Holcim's decision to potentially quit India, which still has millions of kacha and semi-pakka houses and will see massive construction activities in the years to come, has surprised many. It entered the Indian cement sector in 2005. The Swiss giant is now trying to diversify away from its core business of cement and aggregates like crushed stone, gravel and sand to focus more on building technology as it increases its emphasis on sustainability. From the current 13%, Holcim is targeting to generate 30% of its net sales by 2025 from the solutions and products segment, which covers businesses ranging from roofing and waterproofing to insulation and renovation. This is part of its medium-term strategy to become the global leader in innovative and sustainable building solutions, called the Strategy 2025, Accelerating Green Growth. It has made several acquisitions in the past 12 months in Europe and the US to build up its solutions and products portfolio. At the same time, it has sold off its cement operations in Brazil, Northern Ireland, Zambia, Malawi, Madagascar and Russia. And according to reports, next in line is India, where Holcim is the second biggest cement group. The Indian operations represent 24% of Holcim's global cement capacities and 27% of sales. It owns a 63.19% stake in Ambuja Cements and 4.5% directly in ACC. Ambuja in turn holds just over 50% in ACC. They have a combined capacity of 66 tons per annum compared to market leader Ultratech Cement's 120 million tons. So what makes Ambuja and ACC so attractive that it has triggered a hotly contested race between several players to buy them? On a consolidated basis, Ambuja and ACC account for 12% of India's domestic capacity and 17% of the revenue market share. Ambuja Cement and ACC reported a combined net profit of Rs 3,900 crore on revenues of Rs 30,000 crore during the year ended December 2021. The acquisition will give the acquirer one of the best managed and profitable cement assets in the country, which are also debt-free. To give a complete exit to Holcim, the potential buyer would have to shell out as much as $10.5 billion after accounting for mandatory open offers since both are listed entities. This would make it the largest deal in the Indian cement industry and one of the biggest exits of an MNC from India. The high potential cost is attracting bidders with deep pockets. Media reports indicate that India's biggest steelmaker JSW Group, Aditya Birla Group's Ultratech Cement, and ports to energy conglomerate Adani Group have submitted non-binding bids to Holcim. 83-year-old cement maker Dalmia Bharat and the world's biggest steelmaker ArcelorMittal are also said to be joining the race.
They have almost about 67 million tons of capacity in India, ACC and Ambuja combined together. And they are already having a plan of around 5 to 8 million more addition over the next 1.5 years. So any new player let it be JSW or Adani, they are non-cement players. Even ArcelorMittal will be a non-cement player. So any new player, once they acquire these two companies, will directly go to the number 2 position. The third company which is there is Shri, which is about 47 million tons, and Dalmia is the next. Secondly, for Adani and for JSW already has grinding units of about 7-8 million tons, with the clinker of only about 1.5. So they have a clinker shortage or clinker mismatch. When they acquire this company, that really adds value and they go to number 2 position. So that's the primary objective. So building up capacity is really difficult. In fact, it is getting more and more difficult. So you typically take let's say to put a greenfield plant of cement, you take about 5 years from planning to commissioning. That's about, typical size is like 4-5 million tons. If you're getting 67 or 70 odd million tons at one go, even if it is expensive, you might go ahead with this because it involves a lot of process. It involves 5 years of profitability, which you will start getting today. Plus looking for land cost is getting expensive. So all these factors come into play. So that's why the acquisition becomes attractive even at the valuations what it is getting talked about.
UltraTech Cement will face antitrust hurdles with respect to its post-purchase market share in some western states, including Maharashtra and Gujarat. Even so, it can offer to voluntarily divest some of its assets in those particular geographies to secure approvals from the Competition Commission of India. The deal may also face some hurdles from CCI on a different front too. The regulator has been keeping a tab on cement companies for cartel formation. In 2010, it had slapped a fine of 6,000 crore rupees on 10 cement companies over this. While a potential deal can cement UltraTech's position as the market leader, it will propel any other buyer to the second largest player. Ambuja and ACC are particularly attractive for non-cement groups like Adani and ArcelorMittal, who will get the opportunity to gain a huge foothold in the world's second biggest cement producing country.
सब अच्छी दिख रही हैं यार, कौन सी खरीदूं?
ये तो वही बात हुई, 4000 शेयर्स लिस्टेड है, कौन सा लूं?
वो तो सबसे आसान है।
तुझे 5 पैसा नहीं पता?
अब तो सबको पता है। 5 पैसा पर है 4000 स्टॉक्स की रिसर्च, टेक्निकल टूल्स और इन्वेस्टमेंट आइडियाज। डाउनलोड 5 पैसा नाउ।
अब तो सबको पता है, investing made easy and rewarding with 5 paisa. Investments in securities market are subject to market risks. Read all the related documents carefully before investing.
Holcim's decision to pull the plug on an emerging market like India has indeed baffled many. But if reports are to be believed, it is doing so due to its commitment to check global warming. Similarly, but not on that scale, a 55-year-old engineer from Ladakh has been doing his bit to spread awareness about climate change for decades now. Sonam Wangchuk is now a familiar name in India, thanks to his now resounding voice on climate change and innovations in the cold mountains. His latest one is a carbon-neutral solar building which stays warm even in freezing conditions and can help clean the toxic air of Delhi and NCR. I caught up with him in Ladakh to know more, and here's our conversation. Welcome to the show, Mr. Wangchuk.
Thank you, Nazia. Thank you very much.
I also want to talk about climate change. I mean, we know that it is a global concern and we seem to be doing a lot less than what we are supposed to do all the time in that regard. Tell us a little bit about how climate change has affected Ladakh and what can be done about it.
So Ladakh is only the tip of the iceberg and we are the first victims, the frontier. But it will very soon come to the world at large. And therefore, we want to make ourselves heard through messages like these. In Ladakh, we already see glaciers receding by hundreds of meters. We see shortage of water in springtime because there's much smaller glaciers now to melt. Some villages don't have at all. And some villages have become climate refugees. In the bigger picture, and the entire Tibetan plateau is like the third pole of the planet. You know, after the South and the North Pole, this is the biggest reservoir of fresh water. roughly 1.2 billion people depend on this indirectly or directly. So what happens here has a huge bearing on populations down in the Indian plains and those in China. So we have to really take good care of these, both locally and globally.
You also talk a lot about solar energy and usage of solar energy. And Ladakh is a place that can really sort of harness the power of solar energy. How do you think that we should use solar energy to our benefit?
Climate change mitigation, which is generally associated with, rich countries, big cities, definitely they should do. But here in Ladakh, we should also go carbon neutral and contribute as little as possible to our melting glaciers. We have to really change our lifestyles here also, and that's why we are doing research and development on passive solar heating, which means houses that don't need any heating, any fuel, and they are warm in winters of Ladakh. So at our institutes, we have developed these technologies and given it to the Indian Army, the government, the tourism sector, and most especially our own campuses have been designed that way. In the past 25 years, we have not burnt a drop of oil. It's all warm without any oil, just sunshine. And it is anytime warmer than a house in Delhi, for example. No? We are now, our latest innovations are in having even bigger impact. So now we are importing the straw, rice straw or stubble that is normally burnt in Punjab in millions of tons, that makes Delhi air like hell. So we rescue it from Punjab, thereby cutting pollution in Punjab and paying the farmers, and then bring here to mix with Ladakhi soil or clay and make insulated blocks that make houses that don't need any fires or oil to be burnt to keep them warm. So cutting pollution a second time in Ladakh. So this way we would like to make carbon neutral Ladakh a reality. So that's a very important vision, and yes, we are helped by this vision that the Prime Minister in the Parliament of India declared Ladakh should become a carbon neutral region.
Well, you've talked about believing in not just sustainable development, but also regenerative development. One example of that is the way you've built your alternative learning school, brick by brick, a recycled one at that. Tell us a little bit about the concept of building that school and how it is going to help the environment as well. And more importantly, how building that school can help cut pollution in Delhi.
Okay. Our school and the alternative university Hayal and the school SECMOL, they are based on the principle that students in their teens or 20s should be actually doing things rather than sitting and listening to lectures. So while we engage them in doing things and learning the skills, we also want to solve the problems of the region. That's what education should be. It should not be a ritual in itself, but should address a challenge. So we actually created it brick by brick, as you say, and using the science and the geography in the textbooks to design it, so that with the physics you are able to use, conduction, convection, radiation of heat to make them warm. With the geography, you orient it towards the winter sun. So that's how we built. And now we are trying to make it scalable to, as I said, Indian Army, tourism, infrastructure, and locals.
Do you think a model like this can be replicated elsewhere outside of Ladakh?
Ladakh is the most suitable example right now. But yes, even in Punjab and Delhi, you could use it for the reverse, to keep the buildings cooler, using the cool of the night. Like we use the warmth of the day, you could use cool of the night and capture it and keep them insulated in these blocks. But that's one way. More challenges are faced by the mountain people in cold winters. So it can be used in many parts of Himachal Pradesh, Laul, Spiti and Uttarakhand, Nepal, all the cold high mountains these technologies would be useful.
Well, thank you so much. That's such a wonderful ending to this beautiful conversation. Thank you for joining us.
Thank you.
क्या हाल?
मत पूछ यार, फिर से स्टॉक्स में फंस गया।
तो स्टॉक्स के साथ बॉन्ड्स, इंश्योरेंस, गोल्ड में बैलेंस कर।
इसमें बहुत तामझाम है।
तुझे 5 पैसा नहीं पता?
अब तो सबको पता है। 5 पैसा है ऑल इन वन अकाउंट। डाउनलोड 5 पैसा नाउ।
अब तो सबको पता है। Investing made easy and rewarding with 5 paisa. Investments in securities market are subject to market risks. Read all the related documents carefully before investing.
You can catch the full interview on our website or our YouTube channel. Well, like the weather, markets too are going through a volatile phase. Volatility in the secondary market against the backdrop of US Fed rate hike and ongoing Russia-Ukraine war has seen two companies, Life Insurance Corporation of India and Delhivery, trim the size of their initial public offers in May. Will more companies follow suit as the markets are likely to remain choppy? Let's understand this better in our next segment.
After public sector insurance behemoth Life Insurance Corporation of India trimmed the size of its initial public offering from over 60,000 crore rupees to 21,000 crore rupees, SoftBank-backed Delhivery has trimmed its issue size from 7,460 crore rupees to 5,500 crore rupees in order to align with the volatile market conditions. Delhivery's IPO will be the second biggest this year, next only to LIC's, and among the top 5 since 2021. Besides these two IPOs, nearly half a dozen companies plan to raise a total of over 7,500 crore rupees via primary markets in May alone. According to a recent note by Prime Database, 54 companies including LIC plan to raise a massive 1.4 trillion rupees in 2022. These companies hold market regulator Securities and Exchange Board of India's approval. Another 43 companies, the note said, were looking to raise about 81,000 crore rupees where SEBI approval was still awaited. The largest IPO in 2021-22 in terms of size and also the largest Indian IPO ever until the LIC IPO was that of 197 Communications at 18,300 crore rupees. This was followed by Zomato, Star Health, PB Fintech, Sona BLW and FSN e-commerce. So what's in store for primary markets in the months ahead? Will the fundraising frenzy slow a bit? According to Sunil Tirumalai, strategist at UBS Securities India, primary markets will definitely see a fallout of slowing flows and pressure on valuations. The downsizing of the LIC IPO is an example of that. Now, let's go to Ambarish Baliga, an independent market analyst, to understand the dynamics in detail.
Normally, the IPO takes about 12 months of planning and execution. The market environment is dynamic, and at times, it becomes necessary to take action to fall in line with the market condition. At times, IPOs are shelved too when the environment is not too conducive. Therefore, trimming the IPO size as well as the valuation is a prudent thing to do, looking at the choppiness in the market, just to ensure that the IPO is a success. Just like investments, it's difficult for an issuer to time the IPO, especially in times like these. This is when the pricing or valuations become important. If there is enough left on the table for investors, one can still garner a subscription. For the issuer, when it's a choice between lower valuation against a failed IPO, I think the former is always preferable.
So, will volatile market conditions see companies trimming their offer size? Here's what VK Vijay Kumar, Chief Investment Strategist at Geojit Financial Services, says.
In a bull market, even mediocre IPOs, overpriced IPOs, get fully subscribed and oversubscribed. Later, when sanity returns, market punishes these IPOs and the market price goes below the issue price. The most important takeaway from the recent frenzy in the IPO market is to get the issue price right. Otherwise, disasters like Paytm's will happen. If LIC had persisted with their original plan to offload 5% of the equity, LIC would have found the going very, very tough. But by revising the IPO down to 3.5% of equity, that too at an attractive valuation of 1.1 times the embedded value. The issue is getting a very good response, even in these difficult times. Issuers need not wait for a favorable time and postpone the issue, because a favorable time will never come. This year, market is likely to remain challenging. So the message from the market is very clear. Get the pricing right and leave some money on the table for investors.
Today, the markets will react to the US retail inflation numbers and how the global markets perform. Stock-specific action is likely to continue amid volatility.
तुम इतना डर गए? अब क्या किया?
शेयर्स में ट्रेडिंग।
तुम्हें 5 पैसा नहीं पता?
ओए, अब तो सबको पता है। 5 पैसा पर मिलते हैं रिसर्च टूल्स, पोर्टफोलियो एनालिटिक्स और इन्वेस्टमेंट आइडियाज भी। डाउनलोड 5 पैसा नाउ।
अब तो सबको पता है, investing made easy and rewarding with 5 paisa. Investments in securities market are subject to market risks. Read all the related documents carefully before investing.
It may have hit the economy and markets adversely, but the pandemic was in a way good for the Indian pharma industry. India makes about 60% of the world's vaccines and 20% of generic drugs. The US is a major export destination. On its part, the US administration carries out regular inspections at offshore drug-making units to ensure that they stick to the standards. In one such recent check, the USFDA has issued Form 483 to a firm. Our next report tells more about these inspections and demystifies the Form 483.
After a hiatus of 2 years, the US Food and Drug Administration resumed its on-site inspections of drug manufacturing units outside its borders, including China and India. It has been following this practice to make sure that all the medicines which enter into the country follow the set standards. Most inspections were put on hold in March 2020, when the world was hit by the pandemic. Indian pharmaceutical companies, on their part, try to adhere to the norms as any departure may hit their export adversely. In one such inspection at Sun Pharma's Halol facility this month, the USFDA team issued a Form 483. The next morning of 10th May, the share price of Sun Pharmaceutical Industries fell over 4%. So, apparently, the Form 483 and 10 observations made in it were not good news for the firm. The company said that it was preparing a response to the observations, which would be submitted to the USFDA within 15 business days. The Food and Drug Administration has the responsibility of protecting public health in the US. In its own words, on the one hand, it does this by ensuring the safety, efficacy, and security of both human and veterinary drugs, biological products, and medical devices. On the other hand, the FDA is responsible for ensuring the safety of the US's food supply. It also deals with cosmetics and products that emit radiation. According to the USFDA, an FDA Form 483 is issued to the management of the firm being inspected. It is issued at the end of the inspection if the FDA's investigators find that they have observed any conditions that might constitute violations of the Food, Drug and Cosmetic Act and related acts of the US. Observations are made when the investigators find that the conditions or practices observed indicate that any food items, drugs, devices or cosmetics have been adulterated, or if in their judgment these products are being prepared, packed or held under conditions in which they might become adulterated or rendered injurious to health. On their part, the company that has been inspected is supposed to respond to the Form 483 in writing, along with its corrective action plan. The FDA expects that subsequently the company will implement said plan expeditiously.
I'm backed by the nation's trusted bank, SBI, the banker to every Indian.
Well, the largest number of USFDA approved drug manufacturing plants outside the US is in India. Well, that's all we have for you today. We will be back with more news and analysis in our next episode. Stay tuned. Thank you for watching.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.